What's up traders, welcome to Failure to Displace. In this video we're going to take a look at London macro number 1 where we had this epic 5-hour trade on EURUSD. It was a textbook macro entry with SMT. Let's jump into the analysis now and see how this played out. Before we jump into the main analysis, I just want to take a moment to run through the 2024 macros trading plan that I'm using so we understand exactly what we're looking for in the macro windows, and also just take a moment to answer a couple of questions that seem to be popping up in the comments section quite regularly on recent videos, specifically when I've started discussing the macros trading plan. The first question that I'm getting is, am I still trading the 5-minute unicorn strategy that I released, or indeed any of the other strategies that are on my channel? So I think everybody can appreciate that trading is constantly evolving. As traders, we are always learning new things, always trying out new strategies, and always trying to refine the systems that we're putting in place to make us better and more profitable traders. My focus at the moment is trying to get to the charts within these two trading windows, trading less than an hour per day. This is working perfectly for me around my family commitments, and also it's massively helping my own trading psychology because I'm not exposed to the markets for extended periods of times. Because I'm laser focused on the two London macros, 2:33 to 3 AM and 4:03 to 4:30 AM, I can come to the charts and I know exactly what I'm looking for within those very limited 27 minutes of time. This doesn't mean that I'm not going to trade the 5-minute unicorn or indeed the 1-minute unicorn strategy. If that setup occurs within my time window, then I am going to take an execution using that strategy, or indeed any of the other strategies that I've got. I can't unlearn what I've already learned, and all of the knowledge that I've built up obviously comes into play every time I get to the charts. The main focus at the moment though is limiting the time that I'm at the charts. I don't want to be sitting at the charts for 3 hours to 6 hours a day. The whole point of me getting into trading was to build an amazing life for myself and my family. That amazing life isn't going to be me sitting in an office for 10 hours a day, staring at the charts, waiting for the 2022 model to execute itself. So the fact is that any of the strategies that I've put out on my channel, they are very, very profitable. And if those strategies work well around your lifestyle and your personality, then definitely, they're going to make you profitable. For me, at the moment, this is a bit of a game-changing strategy. Really, really enjoying it. In and off the charts, really nice and quickly, which means it's not impacting my personal life at all. And it's exactly what I was looking for when I came into trading. If I can trade less than an hour a day, but still manage to bag myself 1 to 2% per day in profits, then it's an ideal situation for me. The next bit of feedback that I've had is that this strategy is almost too complicated for me to explain when I'm doing the trade reviews. And I will 100% agree with that. This strategy is quite complicated, mainly because of the way the charts are laid out. We're relying heavily on SMT as a confluence for the trade. So I have to compare Dixie with the Euro before I can take an entry. The only way I can do that on bar replay mode is to have the Dixie underneath us and the Euro on top. And then I'm having to narrate not only what's going on in the Euro, but also narrate what's going on in the Dixie. This is complicated to do. I will get better at this, hopefully. The actual strategy itself is quite simple. We are just literally identifying a high time frame point of interest. We're looking for a 1-minute liquidity sweep, creating SMT. Then we're looking for an inversion fair value gap with an engulfing candle. So the setup itself is not that difficult. And when you're trading it in live time, one really nice trick that a couple of subscribers have mentioned to me, so thank you guys for highlighting this to me, is that you can invert your dollar chart. So I can have them side by side on my nice big ultra wide monitor. If I invert the dollar chart, in normal circumstances, these two charts should be mirroring each other. So all I need to do is I press Alt-I on my PC, and this will invert the Dixie chart. So now instead of having to compare the highs on Dixie with the lows on the Euro, which is quite difficult, it takes again an extra little bit of brain function to do that, and in real time on the 1-minute chart that can be hard to spot. If I press Alt-I, flip the Dixie, all I'm looking for is a break in that mirror image. So here it's immediately obvious. On the New York PM session, the Euro didn't break the low from the New York AM, whereas the Dixie did. This is SMT. We've got bullish SMT for the Euro indicating longs. So obviously this isn't a trade that we were looking at because we don't trade the New York PM session, but it's clear that there's SMT now. So using an inverted chart side by side like this, much easier to spot in real time. Unfortunately, I can't use this setup in bar replay mode, I have to do the top and bottom layout with the euro at the top, the Dixie at the bottom, and I can't flip the Dixie to make it mirror. Again, to give us that simple approach to the analysis. I'd highly recommend anybody who's interested in trading this type of strategy jumping onto FX Replay and backtesting it for yourself. It's all about pattern recognition. FX Replay looks exactly the same as TradingView. You can invert by pressing Alt-I again. You can invert your Dixie chart. You can have Euro and Dixie side by side, which is just a game changer from any backtesting software I've ever seen. And you can really dial this in. I'm reading this fantastic book called Atomic Habits, and one of the best quotes on there is, "The only way to become excellent is to be endlessly fascinated by doing the same thing over and over again. You have to fall in love with boredom." This is what FX Replay allows you to do. Instead of only being able to trade one London session per day, you can go in, you could trade 5 or 6 London sessions a day and really dial in that repetition, allowing you to spot the setup just as you would in real time and then execute with precision. There is a link down below, and I've also got a code that you can use for 15% off your subscription as well. It's a game changer of a software. I highly recommend it, so do go check it out. So with those questions answered, let's have a quick review of what we're looking for in the macros, and then we can finally get the analysis underway. So SMT cheat sheet is up here. So again, if you're not using an inverted chart, then you are comparing highs with the lows. If you invert your chart, you're just going to be looking for mirror images. Link to this trading plan is down in the description box below as well, so you can download this and have this on your desk if you would like. We're going to be identifying 15-minute and 1-hour points of interest. We're looking for 1-minute liquidity sweep, creating SMT with the Dixie. We're going to be monitoring for an opposing fair value gap to fail, creating a potential inversion fair value gap. This inversion fair value gap is confirmed when we have a large engulfing candle close over that fair value gap. The entry is going to be on the engulfing candle close. So we're going to enter at market as soon as the candle closes. We're not waiting for a retracement back into the IFVG. Stop loss is going to be at the swing high or the swing low created prior to the IFVG. We are going to have a take profit fixed at 1 to 2 RR. This is something, again, if you are backtesting, definitely be monitoring your take profit, because what I'm finding is when you are on the right side of these macro trades, 1 to 2 actually seems to be a little bit on the low side. Many of these trades are running 4 to 5 R if you're on the right side of the trade. So I may be adjusting this either to leave runners or indeed let these things run to at least 1 to 3 or 1 to 4. So I'm monitoring this as I'm getting more data. Break even. So this is working very, very well for me at the moment. I'm going break even after we take an initial low hanging fruit draw on liquidity. So this, as soon as we take an initial draw on liquidity, we're expecting price to accelerate because we're in a macro through this low hanging fruit and continue on its trajectory, which means going break even is a good strategy. If we take this low hanging fruit and then begin reversing, chances are we're either in the trade too early, or indeed the macro hour analysis isn't going to play out, so we want to be out of the trade anyway. So we're getting to break even very, very quickly. You will find if you're on the right side of the trade, price won't come back. It will just accelerate, bagging the 1 to 2, 3, 4 R pretty much stress-free. While we're in the trade, we are monitoring swing highs and swing lows for opposing SMT. So this may be an early indication that we need to collapse the trade because, again, price isn't aggressively smashing through swing highs and swing lows. If we're finding resistance, then potentially the macro isn't as strong as we were expecting. So maybe it's worthwhile at least getting to break even early, or indeed collapsing the trade just to bag some profits, because you may find yourself in a reversal or drawdown situation. So again, link to the trading plan is in the description below. Links to FX Replay down below, along with a discount code as well. Do be sure to check them out. With all that said, let's jump into the charts now and see what happened in this morning's session. Here we are on EURUSD, and it's very clear to see that we have massive bearish price action. So a huge bearish candle from the news yesterday released in the New York AM session. We have swept previous session's low. We have swept the weekly lows. Price looks to be displacing lower with no sign of pulling back at the moment. So on a higher time frame, we are definitely bearish. One thing to note, we've generated relative equal lows here between the New York AM and PM sessions. So we've got a nice draw on liquidity here. Swing highs on the hourly. We have a swing high up here. We've obviously taken the gap time high. We have kind of more or less relative equal highs actually between Asia and the New York PM session. No massive displacement higher, so we're not kind of filling in this inefficiency from yesterday's news release, kind of consolidating at the low end of the range. I'm very bearish because I am seeing these relative equal lows at the moment, so my preference would be to short somewhere up in these highs with a goal of taking out the low. We can see, as I showed you just a little bit earlier on in the video, we do have SMT with the Dixie on the hourly at least, because the New York PM session on the Dixie did take out the high, so we were putting in higher highs, whereas we were unable to put in a lower low on the euro. And so this does indicate potentially bullish price action, but I am thinking that this draw on liquidity relative equal lows is more of a sign that we will go lower. Let's drop onto the 15. On the 15-minute chart, we have this fair value gap. I'm actually going to scroll forward. This is the 145 candle. This is a news drop. So you can see coming into the session, we did have red folder news at 2 AM on the pound, not on the euro. This obviously affected the euro's price, so that is irrelevant now. We have this BPR here, so we have a bearish fair value gap followed by a bullish fair value gap. When the two overlap is a BPR, so I'm going to highlight this. We've rejected off this fair value gap that has held price up 2 times, so we've created a fair value gap, support, moved higher, we've wicked back into this fair value gap and then rejected very, very strongly. I'm going to pull a fib from the high to the low, because also quite significantly these fair value gaps are in optimal trade entry as well on this price leg. So the news essentially has had a low resistance liquidity run, taking out some swing lows, found support at this fair value gap, very, very large wick. We can expect this wick to get filled in. So we could potentially, coming into the macro, look for a short trade up at the high. If we can indeed maybe come into this volume imbalance. That will be a point of interest, and the uppermost bullish candle there would be an order block. Or indeed we have our points of interest here, which are fair value gaps. So we're looking for price to enter one of these regions within our macro, where we can then monitor for our entry pattern. I'm going to drop onto the 1 minute time frame. We'll scroll forward now. So this line here is our macro open. So this is when we will be monitoring for an actual entry. Now I'm going to remove that fib because the lines are a bit confusing. You see, we're finding support first at that initial fair value gap. We have now come, prior to the macro opening, into the lower fair value gap. We've just swept these lows. We can see the lower end of the New York PM session macro again as well. So you'll know that I do believe that macros are drawn to opposing macros. So they will seek previous macros for liquidity. And so we are into the New York PM session macro, and specifically that 15-minute fair value gap as well. And so this is a point of interest that we are tapping just as we're approaching the open of the macro. Finding some support, so I'm going to now pop up the Dixie. And as the macro opens, we're going to be looking for a sweep of liquidity, inversion fair value gap with an engulfing candle. So this is the first minute of the macro. So our liquidity is down here. Session low that we have, and then obviously the macro high. Liquidity high for the Dixie is up here. So these are the two areas that we are monitoring to spot our SMT. So there's no change at the moment. The highs are intact. So we've come down. We have swept a low here on the euro. So we did have relative equal lows at that point. We've swept those highs as well on the Dixie. So there's no SMT between this tiny little price leg here. So we need to see what happens as we take this. So we've taken that low now on the euro. We haven't taken it on the Dixie. So this is SMT. Again, very, very minor. But it is there. This high is intact on the Dixie. This high has been taken, this low, sorry, has been taken on the euro. And you will see that we do have an inversion, or we do have a fair value gap at this point. So this is the fair value gap that we are monitoring, and we're looking for a engulfing candle closure through that fair value gap to confirm a potential entry. So we're in a 15-minute point of interest. We've developed bullish SMT on the euro. We've got a fair value gap to monitor, so we are looking for an engulfing close above that to confirm our entry. Now class that as an engulfing candle close. This bullish candle is significantly larger than the bearish candle coming down, and obviously this smaller rejection candle here as well. It's a clear closure above this inversion fair value gap. So as per our rules, we enter on the close. So as soon as this candle closes, you will take your entry, stop loss below the low. So we've got confirmed SMT. We have our low hanging fruit, draw on liquidity, just above us, which is currently the macro high, which are relative equal highs. Very, very close proximity. So, I mean, you're literally at 0.5 and you're going to break even here. But as I've mentioned, when these run, you don't expect them to pull back. It should blast through this area of liquidity. And then our 2R as really nice confluence takes us to this swing high here. And that's the setup. So very, very simple. 15-minute point of interest, SMT with the Dixie, engulfing candle over a fair value gap, confirming this is an inversion fair value gap. We expect it at least to run these relative equal highs as a nice draw on liquidity. After it runs this, if it's going to go in our favor, it should just accelerate through that level without coming back to entry. So we'll go break even very quickly. There's the acceleration through. You can see the Dixie is continuing as well, breaking these lows as we break the highs. So there's no SMT as we're running through this level of liquidity. We go straight to break even. So literally zero drawdown. Stop loss goes to break even. And we let this run aggressively. Shows no respect to this bearish fair value gap at all. So we've closed over this bearish fair value gap to sweep the 1 to 2 RR without any stress whatsoever. And that's how the macro trades should play out. But this is also a good example of where 1 to 2 is potentially not allowing the trade enough room to run. Because again, in the macro, it will seek some decent levels of liquidity. Again, we've got relative equal highs here. So we could have left runners, which takes us into 4R, and we already identified that we had that higher time frame order block, and we've also got confirmation of a 1-minute order block inside that 15-minute order block that I identified as well. So we've essentially got liquidity going into a PD array. And we've got overlapping PD arrays here in the form of higher time frame order block into a higher time frame fair value gap into a lower time frame order block as well. And we can see price running nicely through those highs. So if we zoom in on that, we've taken those highs. We've just tapped into this order block, into the 15-minute fair value gap as well, which will be a great place to close out. This could have easily ran to 5R if you'd have left runners or indeed trailed the stop loss. I mean, we've got an order block there. We could have trailed up below that one. However you want to manage the trade, I'm just conscious at the moment that if you're on the right side of the market, closing out at 1 to 2 RR, maybe just cutting the trade short, and we could have much better success by letting things run to 3, 4, 5R when we are on the right side of the market. So very, very simple analysis this morning. It was a textbook, exactly what I'm looking for the trade to play out. It was a perfect example of the macro entry. I hope you found it useful. I hope me clarifying some of my thoughts earlier on in the video wasn't too boring and drawn out. If you did enjoy the video, please leave it a thumbs up. Any feedback, questions or comments, leave them down below. It's always great to hear from you. It really does help me understand potential areas that I need to address moving forward. And likewise, if you're enjoying this content, please do consider subscribing. We've had some amazing growth through the beginning of this year. It's really, really motivating, and it'd be fantastic to have you on board. Thanks for watching. I'll see you again in the next video.